Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, we're just watching as good old lunch eats our lunch once again, taking up roughly a third of my screen, maybe a fourth of my screen. But this thing is just pumping. Is this you guys? Are you guys pumping this thing? Yeah, I know you guys are, you degenerates. What is going on? People are trying to revive this ghost chain over here, right? Luna, they want to just make it into something special again. The devs want to dump on your head again, and so well, more power to them. I guess if people can be hoodwinked by the Luna community once, then they can definitely be hoodwinked by it twice. And so let's just go full steam ahead as people just FOMO into this crazy lunch just pump, right? Moving on to the charts, let's go ahead and just take a look at Bitcoin from kind of a big picture perspective. Here we have the weekly on. You can see, of course, that we're nowhere near any type of a bullish squeeze on a Bitcoin to the upside. We're well under our 200 EMA. If you guys wonder which EMAs do I recommend to you to use, well, let's just go ahead and take a look at the good old EMAs here. I have on the number 2, 3, 7, and then the 3 MA, right? So these are EMAs, and then this is an MA. And the ones that I recommend for you to use are the 9 EMA, the 21 EMA, the 200 EMA, and the 50 MA, sometimes called the simple MA, SMA. Okay, so this is the MA 50, the EMA 9, EMA 21, and the EMA 200, which color coordinates this way. If you guys want to use the same EMAs that I use, that'd be great. There are actually about a good 2,000 people in communities around us who are using these same color coordinations or very, very similar to them related to Alpha Commission. So Alpha Commission itself has over 1,000 members still registered. And so, in the next bull market, many of them, probably the majority, are going to come back using these same EMA color coordinates. And if you also consider that we have many brother and sister groups that have either spawned off of us, or that we've spawned from, or that we're just friends with, then you can understand that using the same EMA colors or very similar colors just does help with communication, because you can say, hey, look, SkyFi, we're getting into a little bit of a squeeze here between the 21 and the 9, and maybe it's time to get back into the market, right? And look, sure enough, there's a bull run after that weekly squeeze with the 9 and the 21. Doesn't matter if you're using the 10 and the 20, those are very standard as well to use. But as long as you're using this type of red and yellow color for basically the 10 and the 20, or the 9 and the 21, whichever one you prefer. It all depends upon the tightness of the lines that you prefer. Basically we're talking about the same thing. And then we can come over here and we can say, oh, hey, look, I want to put all my money into Bitcoin right now. Do you think it's a good idea? And then somebody else can say, oh, hey, man, no way. Look, we're well underneath the 9, right? We're well underneath the 10. And so why would you want to just put all of your money into this asset right now? There's no confirmation of bullishness. There's no bullishness going on here at all. In fact, if every time we're underneath the 9 EMA, we have just dumped to hell. So why would you want to take that chance? At least wait until we get above the 9 or the 10 EMA, right? And so, guys, communicating these things through screenshots, communicating them through just a conversation. You can, with a visual aid attached to it, can help people just quickly interpret what's going on. And if you're using totally different colors, then it can just confuse people. Maybe you're not going to get the best advice that you can. So please consider to use those similar colors. And you can join the Discord at Alpha Commission. There's a link in the description of this video below. Feel free to come over and talk with us. There, of course, is free chat there. There's no subscription cost or anything like that. And so, we're just chilling out during the bear market and hoping to support each other and make some conversation. And EMAs, I still believe, are one of the best ways to trade, especially on the macro. But even on the micro level, you can still see that if we just zoom in to the daily, you can see, look how ugly Bitcoin looks, being underneath its a 9 EMA here. And this is why I just keep recommending to people, take your profits. Always be taking your profits. The motto of this channel is always be selling, always be taking your profits in a macro downtrend. And we are in a macro downtrend. You can see we're underneath our 200 EMA. We are underneath our 50 MA, right? We are underneath our 21 EMA, and we are even underneath our 9 EMA. And so every single one of these EMAs on the daily, guys, on the daily is bearish right now, is bearish. That is an ugly look for Bitcoin. And so, guys, I just cannot recommend, based upon how I'm an EMA trader, to be considering anything bullish right now, or to let anything ride when it's very clear that we have a distribution triangle forming on Bitcoin underneath its 9 EMA, underneath its 10 EMA, and that is always a bearish signal. This thing could break down at any time, and yeah, if it does pop up and recapture its 9 EMA, recaptures its 10 EMA, right? These red lines, and then definitely if it recaptures the 21, then I'm going to be bullish, because look what happened over here when that happened, right? We got a nice run when we got on top of these EMAs, but just using an EMA theory, this looks really disgusting. And you can see what's happened in the past, okay? Like those type of setups, right, where you're just pushing down in these type of distribution triangles underneath the 10, underneath the 9 EMA, they just tend to break to the downside. So, guys, I'm sorry if I told you to take your profit a little bit early on Flux. I'm sorry if I told you to take your profit a little bit early on ADA. Just based upon the charts, I can't do anything except repeat the motto of this channel, which is always be selling, always be taking your profits, put food on your table. Do not be loyal to these coins. These coins will not be loyal to you. And when this chart breaks down, if this chart breaks down, I believe this chart is going to break down, it is going to take all of crypto with it. And that could have happened last night. That could have happened this weekend. It could happen tomorrow. It could happen next week. And as long as Bitcoin remains in this bearish configuration, not just on the weekly, which, guys, on the weekly, this looks horrific, okay? This looks horrific on the weekly, but also on the daily, right? Also on the daily, it looks just disgusting for weeks. Then, guys, I have to be responsible. I have to be conservative. I have to just advise you as your friend, right? Not as a financial advisor, right? But as a friend to my friends who are listening to this video. I have to advise you that personally, I would be taking my profits anytime I got a 15 to 20% pump on any asset that I was holding. I would take my profits. Even if it went higher, I don't care. I got a nice 15 to 20% return. which any trader would be very happy with. And then if that asset pulls back 15 to 20%, then maybe I would consider to get back in, but I would have secured my profits first before I go for another ride. You see how that works? And so let's just go ahead and look at Ethereum and see if there's any difference here. And look, there is a difference. On the daily, Ethereum looks much more bullish. Look at that. It's on top of its 9 EMA, guys. It's getting into a little bit of a potential squeeze. Not a squeeze yet per se, but a potential squeeze with the 21 to the upside. Right? And that could actually end up just giving us some bullish momentum on a lot of these altcoins that track Ethereum. They're probably feeling pretty good today. We do see Flux perked up overnight, probably because Ethereum caught its 9 EMA on the daily, and so that just gave a lot of coins a little bit of reassurance that this market wasn't going to fall to hell immediately, but this could be a false belief. And to point that out, just look right here where we failed to get above the 21. What happened? A huge drop of 20% on Ethereum while we failed to get above the 21. Is that failure going to happen again? Well, I want to see the squeeze pattern put in, a couple candles on the daily squeezing to the upside, or sitting robustly on top of this 21 EMA. And guys, this is going to be an EMA heavy episode of Alpha Commission. Sometimes I use my indicators, sometimes I use momentum, sometimes I use volatility. I am a momentum trader, I am a volatility trader. Sometimes I use patterns and price action because I am a price action trader, but I am primarily an EMAs trader, and there is a beauty to using EMAs. Of course, I do use all of the EMAs that I did show you earlier, which is dang it, which is basically the 4 all the way to the 300, because I am a very nuanced EMA trader. But I really want to impress upon you that you only need 3 or 4 EMAs. The 3 EMAs that I recommend you have is the 9, the 21, the 200, and then I recommend you using the 50 MA as just kind of a standard baseline, because a lot of older traditional stock traders do use that 50, and it just works really well with the 9 and the 200. And then so you guys can have 4 MAs that don't just clog up your screen the way that all my EMAs do, and this would provide you plenty of insight, more insight than you need into trading, because you can see when a bullish squeeze is going to happen. You can see when a bearish breakdown is happening based upon your EMAs. And what do we see happening right here? The potential for a bullish squeeze, but the risk for a bearish breakdown. Okay, so we are just waiting. That's why we can just take a look to the right at what number corresponds with our 21 EMA. Let's just kind of zoom up here just so that we get a good picture. And you can see the 21 is sitting there at 1607. And so if we were able to sit on top of 1607, that would be a very bullish look for our EMAs. We might have some resistance, in this 50 zone, because the 50 is repressing us a little bit. You can see rejection, rejection, rejection off of the 50, whereas previously we were getting bounce after bounce after bounce off of the 50, right? And where we broke above the 50 here, look at that. That was a nice run, right? But where we broke down from the 50, we've just been repressed. So we do want to get above that 50 as well. And so if we're going to be targeting some numbers, the first boss is that 1610, and then the second boss is going to be 1660 approximately. You get above, you beat those 2 bosses, and then the big boss is up here at the 200 EMA, and that's all you really need to consider. You can take your profit along the way at different resistance levels, and then you can just do your your support and resistance levels yourself if you want to consider where you might take your profit or whatnot. But I don't even need to be using just these momentum zones that I usually use. You can see that we are starting to get there. We are going to probably sit above that momentum zone if we don't get heavily rejected here. And that's just going to be a very good look for Ethereum. But since I'm going to make this an EMA's episode, I am going to just turn off that momentum. I am going to turn off our support and resistance and just take a look at what the EMAs are doing. Let's jump over to CRV. On CRV, we can see right here that basically we're under our 9 daily EMA, and so we are not going to be in any risk of a bullish squeeze play anytime soon. So basically, I'm not in CRV to any long side. I just see this as kind of a bearish location for price action to be hanging out on the daily here under the 9. And so I would really want to see, uh, you know, uh, CRV really get into that 110 area, and then I would love to see it above 113, just using my EMAs, if I wanted to consider the possibility of a squeeze on the daily to the upside. So for CRV, we're just going to keep monitoring CRV, not ready to get into it. ADA. ADA is actually already had that squeeze play. Remember, we were playing ADA to the upside. Well, look, back here around 45 cents, the entry that I suggested, we did get in to that squeeze play between the 9 and the 21, and we did just skyrocket up to 50 cents where we did take our profits. We've since had a bullish retracement back to the 21. We did not violate the 21. We did not violate the 9. And so this is still a bullish look on ADA. And assuming that it can hold that 50 MA, that's going to be really bullish because you can see as long as we're above that 50, it's actually pretty nice for ADA. And where ADA gets rejected by that 50, right, it's been pretty bearish. So this is kind of a make or break area for ADA, and then we can consider potentially higher levels for ADA, assuming that it can hold on to that 50, having bullishly retraced to the 21. There's always ups and downs in charts, and so some downs are just bullish downs. They're just bullish retracements, kind of like fueling up the gas tank before you go further on. And ADA is just considering whether it's fueling the gas tank or whether it's getting ready to retire. And so let's just pay attention to what ADA is doing. This is pretty much a low risk area to consider to re-enter, but you still probably want to see ADA sitting snugly above that 50 MA, which currently is at approximately 50 cents. And since ADA is approximately 49 cents, if you didn't enter on the bounce off of the 21 at 47, then you might just want to wait for a little bit more of this EMA support here at the 50 MA. If we look at KDA, KDA looks disgusting. It looks awful. It looks like Bitcoin. It looks like trash. Okay, I'm sorry, Kadena fam. You know I love Kadena, but what Kadena is doing right now is disgusting. It doesn't look good. The 200 is way up here. It's not even attempting to retouch it, right? It's way under its 50 MA. So that's not a bullish look. Anytime Kadena has been under its 50, look at this. It's disgusting, right? It's disgusting. And it's doing it again. It's gotten under its 50 MA again on the daily, and it just looks disgusting. I don't want to see Kadena fall down. I love Kadena, but you know, the chart doesn't lie. The chart doesn't lie, and this is a distribution wedge to the downside. We are slowly losing ground as these buyers are weakening, right? And as sellers are getting more motivated to sell the deeper that we go. And so we are going to have to watch this. I really need KDA, based upon EMA theories, to get above 159. $1.59 is where we can start to reconsider KDA. And to be honest, if a KDA could get above $1.65, that would be, at least based upon our EMA strategy, that would be the best thing for us, because then we would be in one of these squeezes between the 21 and the 10, pardon me, the 9 here. It doesn't matter if you're using the 9 or the 10, doesn't matter if you're using the 20 or the 21. I'll use those numbers interchangeably. The 10 and the 20 are the standard EMAs to use. I use the 9 and the 21 just because I like the spread a little bit better. And you can see when price action kind of flicks around between the 9 and the 21, you can get a nice squeeze to the upside. So that's what we're looking forward to. And hopefully KDA doesn't break down in the meantime. Looking over at ZIL, probably a similar picture. And yep, basically everything that I said about Kadena applies to ZIL here. Disgustingly under the 200, disgustingly under the 50 MA, disgustingly under the 21 EMA, disgustingly under the 9 EMA, and we are breaking down, but not as bearishly as Kadena. Kadena is making lower lows. You can see that at least on the daily, Zilliqa is attempting to make higher lows, suggesting that there are some buyers stepping back in. However, this is just a symmetrical triangle, and symmetrical triangles do have a tendency, just like distribution wedges, to break to the downside when they are, when there is actually down candles in front of it, these kind of institutional down candles putting pressure to the downside, those symmetrical triangles tend to break to the downside. And so basically, this is the same thing as what's going on with Kadena. And so, not looking forward to being in Zilliqa to the upside unless Zilliqa secures strongly above 30, let's just say 37 cents, okay? Because this looks a little disgusting here. And then let's say above 38 cents is, pardon me, 3.8 cents and above 3.7 cents. Okay, if we're within that range, then there's the possibility for a squeeze such as this one, such as this one, such as this one, that just gives us that huge push. And because this is an EMA heavy episode here at Alpha Commission, I just want to show you what I look for. And while I could use our momentum zones, all right, let's see. Where's our weekly 9 is at 40 cents. Our momentum is here at approximately 36 cents. And so basically the same thing applies whether I'm using momentum, whether I'm using EMAs, whether I'm using any of these weird indicators, which you don't really need to be using, and whether we're using just price action, momentum, volatility, whatnot, right? And so, guys, let's just go ahead and move on from Zilliqa, taking a look at Flux. Flux is, Flux did something last night that made me very angry, right? It made me very angry. Let's switch over to the, first of all, let's just take a look at the EMAs on the daily, because we can obviously see that Flux has just been incredibly bullish. Look, Flux had this bullish crossing in stark contrast to Kadena, in stark contrast to Zilliqa. Flux basically took care of business down here at the 13th, right? 713, and it's just been going gung ho above the 9 EMA ever since. It did bullishly retrace to the 9 and the 21. It did not lose the 21, which is an incredibly bullish sign. You see it also checked back right here. And, basically it's been maintaining on the daily above the 9 and the 21. And so this thing, we shouldn't be surprised that it did just continue to go for it. But if we go to the 4 hour, you can see what happened and why I'm kind of upset that I was sleeping at this time. Of course, Flux did have a retrace. I did suggest to you guys to take your profits at that 120 to 125 kind of zone, which was the measured move from this broadening descending wedge. Originally, I was looking at this as a potential inverted head and shoulders, but what I realized is that it's actually a broadening descending wedge. The measured move is still, of course, that 120 to 125 zone, right? Just if there's a little exuberance. We nailed that. We nailed that perfectly. And if you look at what happened, it peaked perfectly at 125. Of course, you could have taken your profit on this candle anywhere. It was approaching that resistance area. And then, I did say take your profit no later than 125. And it's a good thing that you did, because what happened is that we did have basically a 15% pullback all the way down to this 21 EMA, and so you were able to save your profit. If you sold at 120 or 125, whatever, you saved your profit. Whereas many people who didn't take profit here would have just been terrified by this. If we go to the hourly, you can see it more starkly. They would have been terrified by this retrace, even breaking this kind of low over here, and so people probably would have been selling. That's exactly what the market wants to buy back in, right? They want people to be scared that this thing's going to come all the way back down. And so, of course, while we were all sleeping, or at least while I was sleeping here on the west coast of the United States, Flux did catch itself. And had I been awake, had I been recording at the time, I would have recommended to you guys to get back in. And we even see, just bullishness continuing on this chart. Look at this. This looks like a bull flag to me. I'm not going to make a projection on this just because we do have a high volatility week coming up. But that would have been a solid 30% run if you could have caught the top of that. Most people wouldn't have, so probably about 20%. But that would have been a nice run, especially if you had taken your profits here, bought back in at $1.08. Let's go back to the 4 hour, where you can see we just had this kind of bullish check on the 21 on the 4 hour, and on the daily it's just a flick. It's just a flick down and then a pop up, right? Just a rocket ship, right? And so you can see this wick, right? This represents that drop on the 4 hour, that drop on the 1 hour, right? Where just overnight it came back to the 9, checked the 9 bullishly, and then skyrocketed from there, similar to what it did here, similar to what it did here. And of course, that's the story of Flux, just this bullishness. Guys, there is a reason why I didn't just recommend to ride it out. And by the way, you guys have to use your own judgment. I'm not giving financial advice. Whenever I talk about these things, it's always just for myself and my close friends who watch this channel. I'm not someone who markets this channel. I don't pay for any type of advertising. I don't have any type of sponsorships. I don't get any type of revenue off of this channel. It's solely so that I can improve myself, and so that some of my closest friends, my personal friends from real life who do watch this channel, so that we can just help improve ourselves and be responsible for some of the things that we talk about. Um, of course, for them and for myself, I would want to take profits at this measured move of the breaking down of the breakdown of the descending broadening wedge that is the measured move for there. But of course, that head and shoulders actually got confirmed with the pop up here, and then the retrace to the neckline, and that retrace to the neckline of the real head and shoulders, not this broadening descending wedge, which was the original measured move right here, but the measured move of the head and shoulders actually would have been right here, and you can see that that's exactly where we got some toppiness, and so that would have been the next point to take profit. And I really wish for bragging rights that I could have called that, but of course I was asleep. So guys, Flux continuing to look bullish. It was not irrational to take profit at this point. If you see this vertical line, okay, I'm always examining what we're doing. You can see the MACD turned around, it softened, right? You can see these oscillators gave us a red signal to potentially sell. That's a God signal to sell, okay? You can see it doesn't happen that often. And you can see also Let me just move this one over here where you can see it. You can see we had tremendous overheating on some of our volatility. And you also can see this volatility flip that happened right here. It just ended up flipping back up, but it could have easily have turned down. And had that volatility turned down, we could have had just a huge reversal. As it happens, it just continued to expand to the upside. You can see this is starting to get toppy, and we are approaching, actually, we are beyond that, the 90% zone. So usually above that 90% zone, there is a good likelihood to be turning around. So I do expect this thing to start printing some volatility, perhaps to a different direction later on. Um, you do see that our Stokes, right? Our Stokes actually was turning around right on that vertical line. It just so happened that it flipped back up temporarily. So this stuff is all getting overheated and starting to look very toppy. And so whether you took your profit here, whether you took your profit here, or hey, even if there's another push up, we are getting into a zone on Flux where we may have a lot of resistance. You can see this candle right here. Let me just go back to the daily. Come on, load trading view. Let's go. Yep. You can see these candles broke down here, right? We had these huge breakdowns in this area. And so having this toppiness in this area could suggest potentially a pullback. But this chart has been so bullish. There's nothing bearish about it. I don't want to FUD anything about Flux. I think it's doing great. It's the coin that's really doing everything it needs to do right, and it's continuing to do it. It's just that at some point you take your profits, okay? And for me, a solid 15 to 20% is a good profit. For some people out there, maybe they were looking for that 20 to 30%. Others may just want to let it ride and risk all of this choppiness, which could have them dropping back down to hell. But overall, I have to say, even on the weekly, guys, even on the weekly, this thing looks good. It had its weekly squeeze play down here, and then it retapped the top, and then it's just continuing to go. So I can't FUD anything about this. I can only tell you that based upon its weekly EMAs, that as this thing gets extended over its 9, what's the one thing that I keep telling you guys? Like, we always check back to the 9, we always check back to the 21, and you can see that the 9 and the 21 are in this 92 cent to 95 cent range that will slowly rise. So we can say probably a dollar, right, is probably reasonable. At some point, it's probably going to check back to the 9 and to the 21 in that dollar area. And so if you guys haven't been taking your profits, just remember, we always check back to our 9. We very, very often check back to our 21. And so this chart is going to retrace at some point. You can see pop up, pop down, pop up, pop down, pop up, pop down, pop up, pop down. Look at this. This chart went all the way to Valhalla, and it still came back to check its 9. It still came back to check its 21. And then it continued to go. And if we're having a mini version of this right here, right, we're having a mini version of it, then what we could be doing is this happened here, pull back to the 21 and the 9, pop up. Maybe we're going to come back to the 9 and 21 pretty soon, okay? So, guys, again, I can't FUD anything about this chart. It's super bullish, doing everything right, doing everything the right way. But I just warn you, you have to decide at some point to take profit. And when you're seeing these type of resistance zones, like we're at a nice resistance zone right here, kind of support, kind of resistance zone, which could flip to resistance, is what I'm saying. And then we had some mid-level resistance up here. You see all these wicks, right, where that first take profit was. And then we're at kind of the second take profit based upon the measured move of the head and shoulders. Well, the third take profit in my mind would be around that dollar 45 to a dollar 50 zone, just in my estimation. Again, if we go to the weekly, you can see that there are a lot of wicks that kind of end up in that $1.50, $1.45 zone, right? And so this has been resistance, right? Resistance, 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 and it's also been support. So again, like you just don't know where it's going to come crashing back down to the 9. But currently, let's go back to the daily. That seemed to work okay. Currently, yeah, I mean, currently there could be a little bit more of a push left in this thing. Let's go to the 4 hour. Yeah, I mean, there could be a little bit more of a push in this thing, but it is getting super toppy, and this chart is going to want to come back at some point. So, mm, yeah, yeah. I mean, yeah, for sure we had a second take profit. We had the first take profit, which I was able to say on video, and then the second take profit. I mean, that thing just happened so fast overnight and this morning that I wasn't able to even comment on it. But hopefully some of you got that very juicy, very delicious 30% move. Right now, we're probably putting in some type of toppy formation, just confirming that that second take profit was a reasonable place. And we're gonna have to play it by ear from here. Things are moving so fast in the Flux chart that unfortunately I just can't make a video every 4 hours to stay on top of it. But you guys understand how I feel about this asset right now. And guys, one of the things that allowed that bullishness to go forward was if we take a look at the dollar. Of course, the dollar is riding high above its 9 EMA on the 4 hour, and on the daily, you can see again it's riding high above its 9 EMA on the daily, and so that's super, super bullish, guys. That's super bullish. Like this asset, this dollar is super bullish, and the dollar rising is very bad. It's very bad for crypto. So, guys, one of the reasons why we were able to have a pump and some of these coins got saved today from just dropping to hell because the dollar had a pullback from this 110. It came all the way down to 109 at the bottom, gave a little bit of relief to the market right as everything was about to tip over the edge. That's why I was saying take your profits, right? Put food on your tables, right? Always be selling. Don't just be loyal to these coins, because if the dollar shoots straight up, like those coins are going to dump to hell, right? But of course, the dollar did have a retracement to fill in this CME gap, and I had called this gap in the groups, and I said, that it was most likely that the dollar would check back to the 9 EMA to fill this gap here, and look what happened. It came back, filled the gap, and now it could come back to the 21 perhaps, but it could also just spike all the way back up, kind of like what Flux did, because this thing is being just as bullish as Flux, and that could put enormous pressure on the market to the downside. Okay, so guys, today is a holiday in the United States, and so trading is suspended during those holiday hours. Tomorrow is when the markets are going to reopen. We're going to find out if things are going to be dumping or if they're going to be pumping on the charts. And so, we are at support on many of these stock indices, but, that doesn't mean that they're bullishly positioned. If we look at the daily EMAs on stocks, you can see that they are well underneath the 9. And again, guys, to be bullish, you have to be above the 9. You have to be above the 21. But we are below the 21. We are below the 9. We are below the 50. We are below the 200. This looks bearish AF, right? And so we could have a check back to the 9, but we literally just had one the last week. And so it doesn't make sense we would just check back immediately to the 9. That might suggest sideways action or even downwards action, but hopefully we are getting a little bit of a bottom and we do have a little bit of a run, but we're gonna just have to wait and see. Okay, guys, unfortunately there's no clear big picture here. ETH is bullish, Bitcoin is bearish, Kadena is bearish, Flux is bullish, ADA is bullish, CRV is bearish. Everything is mixed up. The dollar is up and down schizophrenically, but overall up. The VIX is up and down schizophrenically, but overall is pushing up. And USDT dominance. Let's just check USDT dominance. It is bull flagging, so that would suggest that markets want to continue down. So we'll find out. We'll find out next week how it goes. That's your alpha for the day. Stay safe and happy trading.